Good Wednesday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Dimitri Pargamike. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance.
All right.
There's a disclaimer. Let me share my screen. If you guys are joining us for the first time, the point of this show is really to answer any questions you may have about Market Chameleon tools, data, analytics. We could discuss strategies or something that you've seen out there you would like to bring into the discussion. A couple ways to ask questions. You could put that question on the live chat on YouTube. Will's watching it. He'll read them back to me. If you want to come on a show and ask a question live, we also provide a link to Zoom. Click on that link, takes you over to Zoom. Once you're in Zoom, there's a button, raise your hand. Click on that. You don't have to turn on your video camera. Once we let you in, everybody can hear you, and you can ask your question live and direct. While we're waiting for questions to come in, Will, what we'll do is take a look at the pre-market report. I had some outstanding questions from yesterday that we will cover, and I'll show a new feature we put in there. I think it was from a suggestion on this show, so I'll show that feature as well. It has to do with stocks that are targets of takeovers, and I think there was a request for an indicator. So when you're doing your analysis, and you might be looking at the options, you might be looking at the other charts, and just as an indicator that, hey, it's a target of a takeover, and you should know that when you're doing your analysis.
Do you know who requested that? Does anyone's name stick in mind?
I don't remember who requested it. I know I put it down as a note, so it was a while ago. I wrote it down as a note and kind of made its way to, we do feature enhancements every week. Sometimes we do once a day, sometimes we do, 2 or 3 times a week. I don't always talk about those because sometimes it's just, we add filters or we improve processing, make things easier, faster. So we do a lot of them. I don't talk about each and every one of them, but this one came directly from the show. I don't remember who the person was. I think you read it back to me after the show. I just wrote it down. I thought it was a good idea. So I'll show you how that looks like today.
Oh, that's perfect.
Yep. Let's start out with the pre-market report, then I'll move on and show you how that feature looks like. And this here is the pre-market report. These are stocks trading in the pre-market hours. We have our most active stocks, our list of biggest percentage gainers and biggest percentage decliners. Here we got 136 stocks on our percentage gainers list, 73 on the decliners. From that perspective, we look like we're setting up for a slightly bullish bias at the open. Let's take this list and narrow it down to only S&P 500 companies, see what's going on there. And we want to take out small cap stocks, ETFs, leverage products, closed-end funds, everything that's not part of the S&P 500. So we could narrow down our focus. And to do that, I'm going to use the filters here above. And this one in ETF, we're going to drop it down. We get a list of ETFs to choose from. The top one, SPY, that's S&P 500 ETF. When you click on that, it will filter the list below, the pre-market list below, and by the stocks that are in SPY, or the holdings in SPY, which are the S&P 500 constituents. And here we see 27 made our percentage gainers list, 11 on the decliners. From this perspective, still looking like we're set up for more bullish bias at the open. If there are no questions here, I'm gonna kind of move on to get some of these features and questions answered from the previous shows.
Perfect.
Yep. Let's first take a look at the new feature, and this was requested on the show. And sometimes you're looking at options. You could look at an implied volatility that's very low and looks attractive, but that stock could be a target of a takeover. So if a stock is getting taken over for cash, let's say $25 cash, and it's likely that this will happen, then the implied volatility will fall because it's not expected to move around anymore, especially once it gets taken over for cash. That's it. All the options will just, go to parity at $25 because the stock's done. And, and I do think it's a good idea, especially sometimes you find stocks on the screeners. You could go look at implied vol rankings, and you might get implied vol rankings that are, very low. And some of these stocks could be subjects of takeovers. And when you go to the stock, even as you're doing your analysis, if we know that the stock is a target of a takeover, if we picked it up and it's in our database, we added the indicator. So like here, Activision, here, ATVI. This is $76. It is subject of a takeover. I think Microsoft, right, is trying to take it over, but you could see here, this is the target, $95 per share, expected to close fiscal year 2023. So if you click on it, right, if you click on this, it'll take you to the press release. So you could read about it over here. But I'm coming back here, and looks right now, it's obviously there's a big discount to the takeover price, and they are going through regulatory channels to see if they could get it approved. So we don't know if it'll definitely get taken over for $95, but that's right now it is a target, and that'll play into how you might strategize around your options, right? Knowing that information is important when you're trying to figure out, well, how do I want to play this, or how do the options look like? And obviously the markets here are indicating that there is some risk that this takeover may not even go through. So you still want to do your research. You still want to, pay attention to what's going on and make sure that what you're trading and what you're doing takes all those into consideration. But the point here is that there is something going on in the stock, that's material. So we did have a request to add it, and when you're going through the options chain, it makes it a little bit more convenient, right, knowing that information as you're looking through the options chain and trying to figure out, hey, do I want to do any type of strategy based on what's going on. All right, so there's another one. I've been testing it out. Here's another one, FORG. So here, this is a stock takeover target, expected first half. Again, you could go click on it. Then you might want to go do more research on it, because I'm sure there's lots of news coming out around it. And sometimes they don't go through, sometimes they fail, sometimes they go through, but just knowing that information can be important in your overall valuation. All right, so that's how it will look right now. And we are only adding this alert if the takeover is for the entire business, and we have more clarity on it. They give you with a target date and target price. All right, so we'll have to have enough information to create that alert. So if the data is fuzzy, or they're giving some, maybe it's like a structured deal with no real clarity, we won't add the alert. We do need some clarity about it. So with a target, it has to be for the full business, can't be partial. It has to have a target price and an estimated date. All right, so don't know if that person's still there, but that's where we added.
Perfect.
Okay. There was a question yesterday, I think it was on seasonality. And the question on So I'm going to go to the seasonality screener. And the question was, I forget exactly how it was worded, but basically saying, can we look at seasonality by the sector, S&P 500 sectors or sector ETFs? And here you can do that here if you're looking for a calendar month, right? So I'm going to we're going to do that now. So I'm going to use the calendar month right here of January. So that's this month, right? We're looking at January because we just started it. And what this will do is go back for the month of January. We have a list of all the stock symbols in here. So for the month of January, we'll say we have 10 years of data, and this will show what percent in the last 10 years, the month of January, the stock was up from the start to the finish, percent that it was down. It also gives us the average return. So here, we could click on that just to get an info sheet. So we see this is Agilent Technologies. For the month of January, 60% of the historical observations, they were up, 40% lower. On average, gained 0.9%. The median return on it was 1.6%. So that was the average could get skewed up or down. So the return right in the middle, 1.6%. The best return for the month of January was 12.7. In the last 10 years, the worst 12.6. So you could see here the up move and down move almost the same. Standard deviation is 9%. So this is the standard deviation around this average. And you could see the sharp. So what this is letting us know is that there's a pretty big variance around this average, right? It's 9% up, 9% down from an average of 1%. And I'll skip these. So the question then is, how do we narrow down this list and compare the different ETF sectors? And I think we lost Will, so hopefully we're still there. I'm not sure where he went. But one way to do it is if you create a watch list of ETF sectors, right? And you could create any watch list, but let's just say the S&P 500 sectors, then we could just use that filter once you create a watch list. And in that filter, let's see, I think I have it in here, S&P 500 sector ETFs. I'm going to select it. And now you see I have 12 stocks in here that I put in. I included SPY. And now I could compare all of them on this screener. So now they're all lined up. And here I have SPY last 10 years. So I could see on the month of January, SPY, 40% of the observations were higher, 60% lower. On average, it did gain 0.3%. The median return was down 0.5%. Showing that it tended to be weak. So the market, if we use SPY as S&P 500, it tended to be weaker the month of January. The best return in the last 10 years, it was up 8%. The worst, down 5.3%. That's probably why it's carrying that average higher. So you can see here that the average gets pulled by those extremes. Standard deviation, 5% around. So pretty high standard deviation. See here, this taking the average return, dividing it by the standard deviation, give you an idea of that chart. These are absolute returns just to look at average volatilities. Okay. So if we go down, we could see which ones did better. So XLU, let's see, click on that. That's the utility sector. So the utility sector tended, out of this group, out of all these, utility sectors seem to do the best in the month of January, with 70% of the observations higher, 30% lower. On average, gained 1.9%, median return 2.7. And you can see here the best return in the last 10 years, up 6.7%. The worst drawdown down 3.3%, standard deviation of 3, giving you a sharp of average return divided by standard deviation 0.56. So this would at least stand out from a historical perspective as the best sector performance out of the S&P 500 ETFs. Okay.
Hey, D, I'm back. I'm sorry about that. There was an issue. We had a new chameleon who came in and asked a question, and I wanted him to come on live to ask it because I'm not exactly sure from the chat what he was asking about Theo value, but are you all right if he comes on in?
Yeah.
I think his name is Ionis, if that's correct. You're coming in. Just unmute yourself when you come in. Thanks for checking us out.
Hey, Ionis, how are you? You just unclick mute.
Yeah. Hi, Dimitri.
Hi, how are you?
Hey, Ionis, thanks for coming in.
Thank you, guys. So I just subscribed for it. So it's my first month with Market Chameleon. I'm really excited. I understand the concept of taking lots of trades with positive expectancy.
Yep.
What I would like to ask is, how do I manage a losing trade? Or is there any way do I target for the Theo value? Where should I set my stop loss? Something like that. In terms of risk management, I would say.
Right. So there is no clear, method of saying, this is exactly what you should do to manage your risk, because your risk is changing and all the factors are changing kind of as the market moves on. And really, your positions kind of dictate what you should be doing, right? Because as you're adding positions, you're going to start either increasing your risks, or as your positions move, the stock moves, you're going to have increased risk. And that risk kind of dictates to you what you should be doing to mitigate it. I don't have there's no rule of thumb, except that you should be always monitoring your risk and looking for ways to mitigate your risk. And a lot of times you're using options to mitigate that risk, or you're using other things, or you're just taking that risk off. Sometimes I think people ask me the question in terms of, and I'm not sure where they're getting this, either maybe they saw a video on YouTube, but the way the question sometimes is posed to me is, well, if I lost, if I did a trade and I lost, how do I manage that? And to me, it almost sounds like, there's a way to fix it and get out of the loss, but it's not the case. When you're managing your risk, it has nothing to do with your previous gains or losses, right? Your risk is going to be your risk. At this point, this is your risk, right? I'm risking this much at this point, and it has no bearing if you made or lost money on it. It's just like, at this point, this is what your risk is, right? So there's no difference to me managing your risk if you made money or if you lost money, because the risk is at this point, I stand to lose on, on a move up or down, and how much do I want to risk, right? So the question should be is like, kind of, what is your risk at this point and how do I manage it, right? So the previous P&L has no bearing on it, right? No anymore. Like it's not a factor to make a decision. It's almost like, well, how much your risk? So for example, maybe you made, let's say you bought an option at $1 and the option went to $10. Well, now, yes, you made money, right? But it doesn't, what's happening is that at $10, right, now your new position has more risk, right? Because at this point, it could be a bigger portion of your overall portfolio. And that's why you should be taking it off, because they say, oh, wait a minute, I went from this, I was 1%, 1% risk. Now I'm a 10% risk, because it represents a bigger portion of your portfolio. And that's why it would dictate for you to take it off. As far as like managing your losses, that's all pre-trade, right? So if you're looking for a way to say, I want to mitigate my losses on anything, that you have to do pre-trade, right? What is the maximum I want to lose in the worst case scenario on this? How much am I willing to risk on it? And you have to make those decisions before you even enter in the trade, because once you enter in the trade, there's no way to reverse it and fix it, right? If it goes against you. So on any single trade, there's always a pre-trade risk management and decision you have to make. And I always go into a trade thinking that first. I don't think about, okay, I'm going to make a bunch of money on it. I always think about how much, of my risk capital do I stand to lose before I enter in this trade? I always think that first. Okay, that's the number one on my mind before I enter in that trade. Am I going to be in business? How badly is it going to hurt? If all my assumptions prove wrong and I didn't see information, somebody knows more information than I do, and I'm completely wrong on this, how much do I stand to lose? Am I still in business? Am I getting, how bad is my stomach going to hurt if this thing goes against me? And it has to be completely acceptable, because when I do a trade, it's a waste of time to watch that trade at that point, right? Because watching that trade is not productive, right? It doesn't do anything. It's not going to change anything. So once I do that trade, to be productive, I'm on to the next analysis, next trade, doing my position. So it's almost like any trade that I would put on, I barely feel it in the overall portfolio in a single trade, unless it has really good edge.
Got it. Yeah.
What I mean?
That's a good approach.
Yeah, and that's how it should be. Like, you should barely feel, and that's the beauty of using options, is that you can figure out ways with options, either through spreads, or there are other ways to structure it that you could risk smaller amounts than just buying out, right? And that's what you should be focused. Like, your one advantage is I could risk smaller amounts, and and move on to the next trade, because the only way I'm productive is finding more good opportunities or managing the risk I have. But zoning in on a single trade and trying to figure out on this single trade how I'm gonna, like, win the lottery is a waste of time. Nobody, there's no way really to do that. And over trade on a single idea.
Got it. Yeah.
Yeah. So I would manage it that way. I think I did like one time a webinar, and I did get a lot of compliments on it, and said, like, think of it as like when you're trading, it's like managing like a supermarket or grocery store, right?
Yeah.
And even if something looks really good, like, oh wow, the price of milk is really low compared to historical levels, so I should buy it. But you're not going to fill up your entire supermarket with milk, no matter how
That's
cheap
a trap. Yeah. Sometimes you find something very compelling and you say, I will leverage a bit more on that, but that's not correct. Yeah, you're right.
Yeah, exactly. You might leverage a little bit more on it, but not like your entire, and not to the point where you're like, wow, I bought so much milk that I have to sell this milk before I could even, fill up my store with apples and oranges.
Got it.
Yeah. So kind of think of it that way. And in options, sometimes there are opportunities to leverage bigger and go bigger, but those are not from day to day. Those you will find because all of a sudden, and by doing a lot of small trades, you're going to start knowing and noticing those opportunities, right? Yourself. Because your expertise, right? What you're doing is building up your knowledge and your expertise and your experience to the point where nobody's going to have to tell you this is a great opportunity. You're going to know because you've already done it so many times that you're like, oh, I could go bigger, So
Got it. Thank you.
Yeah, and it's a good question. I get it a lot,
I know. Yeah, I know. Dimitri, another short question, very short. Can I ask you? Do you have time?
Sure.
So do you track your portfolio delta? I mean, do you try to take or not, since you take trades on positive expectancy?
So it is good to track the portfolio delta. Your portfolio delta, your vega, your theta, those are really good. And I'll tell you, I am working on a approach where you'll be able to do that, because we are working right now with certain brokers. We're working with Interactive Brokers and TradeStation to allow those customers to link their accounts. So once you could link your accounts, then those accounts, we could put through a portfolio analysis so you could see your overall delta, vega, and theta, because that's important. Yes, when we were trading, it was always important to look at your overall portfolio, where your risks are concentrated, and a lot of your trades will be dictated by your portfolio, right? Because your portfolio will then say, hey, all of a sudden the stock market moved up, I have too much deltas, I got to reduce it. The stock market moved down, the markets moved up to my long strikes, now I have too much vega, I got to sell some vega, sell some theta. It moved away, I got to do something else. So over time, like, think of it as a supermarket. If you're running a supermarket, your sales will dictate what you have to do. So if you're out of milk, everybody bought milk, you got to go buy more, right? If you have too many pretzels and nobody's buying pretzels, you're going to buy less of them, right? So your portfolio, and as things are moving around, will dictate kind of what kind of trades you should be looking at.
Yeah. Okay. Thank you, Dimitri.
Yep. Thank you for the question. I think that's it. We're right at 9:30.
We opened up in the markets. Ioannis, thanks for the call. Bring it anytime. That was awesome. Very much appreciated.
Thank you so much.
All right. Great job, Dima.
All right. Well, thanks everyone for joining. Stay safe out there. Have a great trading day, and hope to see you guys tomorrow.
Thanks, everyone. Have a great trading day. Great job, D. Bye.